What Josh was saying is B of A's Michael Hartnett today says bear market rally is over. We're in technical recession. We just don't realize it.
So I don't have Mr. Druckenmiller in front of me, but I do have Josh with me. So, Josh, based on what you're saying, would you recommend selling stocks today?
No, I would recommend, if you're out here, not a professional trader, not sitting in front of a screen all day, and not with the ability to be nimble, stop playing this game. You are going to chop yourself up. Every time somebody tells you such and such is going to have solid earnings, it's not going to help. So here's what you can do and be very practical. First things first, tighten up the time frame on the trades that you're making. Second, don't go into anything without a predetermined stop loss. I talked about a short-term trade in FedEx. I know exactly where the market tells me I'm wrong, and that's where I'll be out of that. That is the way that you have to comport yourself in this market. If you're a longer-term investor, this is not an environment for you to be picking through 8Ks and trying to understand whether or not Wall Street's estimates are a penny high or a penny low for next quarter. None of that kind of behavior is going to help in this environment. So I think long-term investors need to remind themselves there are periods of time where the market does not reward fundamentals and does what it's going to do. And if they're not going to be in here every day, they shouldn't be in here at all. Be long, have your asset allocation, be diversified. Be diversified.
Yeah.
Go ahead.
So, and listen, this is going to sound like I'm picking a fight with you, but I'm not. You and I look at the markets very differently, and we know that. We've been doing this many years, all right? Basically, you and I disagree on everything except the conclusion, all right? I think earnings matter. I think fundamentals matter. I love 8Ks. I love looking for the value in the debris of what's going on.
How is that working out for you this summer?
Look, if you want to pick a fight, fine. I'm giving you something to work with here, which is that both of us come to the same conclusion that for long-term investors, this is not a time to be selling stocks.
Well, the problem with that is, as some would suggest, is that the time for selling stocks has passed. Now it's too late.
Okay.
But the problem with that is
depends on the stock.
Because, well, right. But some, and I don't mean to be offensive in the way I say this. I really don't.
I'm with you. Keep going.
Because some have listened to people like you who say everything is fine and the market's going to 4,800 or 4,900, so they stayed, and now it's too late to sell, so they're forced to hang on and feel bad because the reality of the situation seems to be. I'm really trying.
Well, look, everybody knows where you're going, Scott. Everybody knows where you're going.
Much worse than you suggest.
Look, investing isn't easy. I appreciate that you're not trying to throw a knockout blow. I appreciate it, all right? But here's the basic truth. Investing isn't easy. And the 3 years that ended December 31st, 2021, made people think it was easy. Oh, you just throw stocks at the FANG, or money at the FANGs. You just throw money at stocks that are splitting. You just throw money at GameStop. No, that's not how it works. If you do your work, if you do your analysis, then you can get through periods like this, like I am getting through, feeling comfortable that the value is there and it will be realized. It's just a question of time. I was buying back into this market in late March. Clearly, that was the wrong time. Clearly, I was early. But it doesn't make me look at the situation right now and say I was wrong. It's just a matter of time until the value comes through. So I'm not backing off of any recommendation either on the markets or individual stocks.
Okay, Brenda, I apologize that I haven't gotten to you sooner. I hope you'll accept that. But what is your view, given what you heard and what you came prepared to say today?
Yeah, I think today is a particularly frustrating day because I think when we look at the components within CPI, there's just some things that don't jive with other economic data we got. For example, if you were to look at industrial production numbers, it showed that vehicle production had picked up, yet it's not flowing through in terms of what we would think would be more supply, driving prices lower. And then we're seeing categories like food, increasing significantly at more than 10% year over year. It was the highest increase since 1981. And that impacts everybody and certainly impacts the consumer. So I think there is, just reiteration of this confusing environment that we're in. And some of the signs related to things like food are troubling, I think, for the consumer overall. But I do think, to this conversation between Josh and Jim, if you are a long-term investor, I think this isn't a bad moment, especially to pick off some of the companies that really have very strong fundamentals that have been navigating through this environment thus far. And if you have a long-term time horizon, I think you will be rewarded over the long term for that.
All right. Let's welcome in our headliner today.